Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, September 11th, 2020, and we had some profit taking this holiday shortened week. Markets lost about 2% on average. Only the bonds were higher, and surprisingly to a lot of people, the volatility index dropped a lot. I always call the volatility index the most confusing and misunderstood indicator there is, which is why I never talk about it. The S&P 500 is still below the volume weighted average price from the peak. In fact, that's exactly where it found sellers here on Wednesday of this week. And then we reemerged with more weakness from there. And that's not to be a surprise when we have a declining 5-day moving average. So again, when the 5-day moving average is declining, it tells us the intermediate term trend is lower. And we are always looking for potential levels of support, but we wait to buy until the buyers have really regained control. And to me, that means they take back control by showing that the 5-day moving average is flattened out to rising higher once again. One potential good thing this afternoon was that we undercut the prior low by a little bit and then closed above that level. That's often what happens at a near-term turnaround area, and you can see it occurred right at the 50-day moving average. That's just one small piece of potential bullishness, but still we have the pattern here that's very clear. It still is lower highs and lower lows below a declining 5-day moving average. So we'll be on alert for the potential that market can turn back higher next week, but so far there's no evidence of that. We broke this longer term trend line, and as I always say this as well, that breaking a trend line doesn't mean the trend is over. It means the rate of the trend has slowed down, and here we are at an important level. Perhaps we get back up above that 20-day moving average next week. That would be good to see. Otherwise, it seems like we're maybe due for a little of time correction. So in other words, keep an open mind. Right now, the short and near-term trend are lower, so we want to maintain a strong defensive position. The NASDAQ this week did close below the 50-day moving average. Now, the 50-day moving average is rising, so don't get too bearish about it because of that. This market has been due for a pullback, and now over to the 30-minute time frame, you can see the same thing here. We maintained below the volume-weighted average price from the peak, and we're going to want to see that flatten to turn higher, just like we spoke about last week, before we can say that the buyers have regained control. And we still have a declining 5-day moving average in here as well. So no reason to be a buyer yet. And, not from the case standpoint of if you're looking to buy into an uptrend, because right now in the intermediate term trend is still lower. Longer term, of course, we're still in a major uptrend here, and we've come down and tested some key volume weighted average price levels. But testing a volume weighted average price level is a potential level where buyers can gain control. We still wait for the evidence on a shorter term time frame. So let's take a look at what that might look like in the case of the NASDAQ. If we were to look for the bullishness here, maybe we'd see something like this. That would get a lot of people excited. And then if it were to come down and see that 5-day moving average flatten out like this next week, then I would start to look for the potential bullishness that it could get back above that volume weighted average price. I would most likely be looking to make a purchase right here. That would give me the ability to put a tighter stop, but we'll see what the market gives us. I'm not here to make predictions. These are just potential scenarios. The Russell 2000, as we know, failed pretty miserably last week. It broke below that prior band of support, and it's stuck below there. We're also below a declining 5-day moving average, and over to the daily time frame, it's been a disaster. From this failed move higher, we see that it failed quickly. Now it's down to the volume weighted average price from July. Is that going to hold? I don't know. I want to stay away from this market because it has lower highs and lower lows below a declining 5-day moving average, just like the biotechs do. We've spoken about these biotechs for the last month and a half about how they're stuck below the volume weighted average price from that peak, and we saw that volume weighted average price from the peak became the perfect place of resistance, just as we saw supply there in the S&P 500 this week. So back to the biotechs, it is guilty till proven innocent, and we still have a prior low showing supply and lower highs and lower lows with a declining 5-day moving average. no reason to be buying the biotechs. You can look at all the potential levels of support you want, but right now there is no actual evidence buyers are regaining control. Semiconductors experienced a pretty good sell-off here recently. They are still also below that volume weighted average price from the peak, and you can see here it was perfect level of supply and resistance over 3 occasions so far. This is why we look at it. We still have a 5-day moving average which is declining. That tells us don't trust rally attempts. Maybe you're a day trader and you want to day trade some of these moves to the long side, but be aware that again, with a declining 5-day moving average, the sellers are in control. Now, we didn't make a lower low in the semiconductors. Maybe that's something that's building for next week. Just maybe, though, we need actual evidence. Actual evidence comes in the form of buyers back above the flat to rising 5-day moving average. Financials just continue to be a waste of time. I don't even want to talk about those truthfully. Let's take a look at Apple. Still below the volume weighted average price from the peak here, and you can see that's about where it's finding supply. It's below a declining 5-day moving average. On the daily time frame, it's coming down to the 50-day moving average in this prior band of support. So maybe we kind of undercut that level and then begin to turn higher. I think you certainly want to be ready for the potential of a turn higher in shares of Apple. But again, the evidence isn't there yet. If you're buying now, you're early and you're guessing. And to me, that's not the proper way to do it. Let's take a look also at Tesla. Tesla still below the volume weighted average price from this peak here. And guess what? That's where we see sellers emerging or very close to that level. This is why we don't trust rallies with a declining 5-day moving average. And well, it's below the volume weighted average price from the prior peak. In order for buyers to regain control of Tesla, what would we need to see? I think we need to see something that looks almost like what I put on the S&P 500, something like this. That'll give that opportunity for the 5-day moving average to flatten out and turn higher. And then perhaps you want to be a buyer over here with a stop underneath one of these higher lows, if in case that is what happens. Again, not predictions, but projections of what's possible. Right now, sellers are in control of the intermediate term trends in these markets, so just give them time to settle down before you decide to put your hard-earned money at risk.